Well, it is the start of a brand new trading week and the last one, in fact, before Christmas. But the local index looks like it's on course to end on a down note. Here to talk about why and more is Marvin Germo. He's a stock market trader and registered financial planner. Marvin, good to have you on the show. Once again, my question straight up is, isn't there supposed to be a Santa Claus rally by now? If you take a look at where the PSE is, we're just a little below, well, 6,800. Not ideal, below the psychologically important 7,000 levels. Quarter to date, in fact, only mining is holding strong, surprisingly. 6.5%, gaining 6.5% on the quarter. What is going on here?
Okay, first of all,
at least it's green and red.
Merry Christmas. Nothing much has changed since August, since the market started to reverse and correct downward. We're still seeing it on a downward projection still. So will there be a Santa Claus rally? There have been years also where the PSEI dropped during December. So this could possibly, by the looks of the trend right now, which is going down, we might not see a Santa Claus rally until we see significant reversals at around 7,400. Although on a short-term perspective also, we dropped a significant support at 6,925, which could bring the market down over the short term to around 6,7 levels. So in terms of valuations, the valuations are still good. It made a lot of stocks relatively attractive. So for long-term investors, this is what I'll see about the market. You can use this downward projection as an opportunity for you to position, especially if you're positioning in the market for a very long term. Use this cheap stocks as an opportunity for you to come in.
Let's talk about positioning in just a short while. But the other, of course, the big surprise last week was the U.S. Fed sounding a lot more hawkish than people had expected. They signaled at least 3 rate hikes by next year. I had BSP Deputy Governor Diwa Ginigunda on the show last week, and he says, look, it's not a cause for concern. The local markets, the local economy should be able to adjust to this new normal. Is that what you're hearing on the ground and in the trading floors?
I agree with what he said also, that it's a signal that the U.S. economy is better. The largest economy in the planet is doing better, functioning well, which will spill over also to our market. So will this batter our markets over the short term? Of course. Everyone has been noting that any movement in interest rates will not be good, not just for our stock market, but in other markets around the world.
Emerging markets everywhere, in fact.
Yeah. They would like to get fixed returns that are relatively more guaranteed than the volatility in the market. So a lot of people have been expecting this. Analysts have been pegging 100% rate hike already. So, but I'll go back to the trend there. Regardless of what the Fed hike decision was, we were already in a downtrend. We were already bearish. So this just added a negative fuel to what was already market that was going down.
Negative market sentiment throughout the year. Take a look at this Fed hike probability. Most investors not pricing in another hike at least until second half of next year. But I want to come back to your point about positioning now. Where would you go hunting for bargains? Keeping this in mind, the fact that possibly we're looking at least 3 rate hikes next year. And of course, anytime the U.S. Fed tightens policy, emerging markets outflows follows.
At the end of the day, movements like this bring prices down, but it does not change any inherent value that we have in our economy. So the current theme that I'll be looking at is stocks that have value, stocks that are growing, but stocks that have become cheap because of the market going down. First of which is Ayala Land. I've mentioned Ayala Land over and over because now it's at historical 5-year PE ratio lows. And you all know the growth prospects of this stock. This is in line with a lot of projects that they're laying out in the future, and they have the ability to borrow cheap. So what's stopping them from creating more projects later on? So if you'd like to position well, Ayala Land's a good stock. Vista Land is also a stock that's relatively cheaper.
And here we're taking a look at your stock picks, Ali there. Vista Land you're talking about, but take a look at Ali. I want to come back to that first. 22.7 times forward earnings. That's still pretty pricey, above the index average.
Yeah, it's pretty pricey, but Ayala Land is like the Apple of the PSEI. People are willing to buy it at the premium because of how good the reputation of a stock is. If you look at its highest range, though, it would hit 37. It would be at the high 30s for its PE ratio. So this is relatively cheaper. Should it go back to at least its average, you have a good I guess you have a good movement or you have a good upside to the stock as well.
Mind you, though, year to date, it hasn't delivered much for its stockholders. It's down more than 11%.
One of the things about that is this: when it hit 40, its PE ratio was at 37, at 35. So, as an investor, I'd see that as something that's expensive. So now, it's an opportunity already for them, for those who are investing, not trading, to position well and look at the growth for the stock.
All right, I can see what the draw is for Vista Land. What about Holcim, though? 16.5 times forward, still rather pricey as well.
Rather pricey, but what I like about this is it's in line with all of the construction that you're foreseeing. ROE is at 39, which is very high. Even if it doesn't move, dividends is at 5.6%, which is very, very attractive given the volatility that we have. And people don't factor in that this company has no debt. So all of these three companies have EPSs that are increasing. They've been growing through the years, regardless of who the president was. So if more growth is coming to this, how much more? How big the potential these companies could actually become later on in the future?
And in fact, it has returned 12.5% to shareholders. I'm talking about Holcim, of course. Anything outside of the infrastructure growth story that's catching your attention at all? Anything in the energy, mining, even telco industry?
I actually like Pure Gold. It's still consumption, but at its price level now, it's relatively cheap. I probably look at it at around 36 pesos. That combines where the strong support is for the stock. If you let me pick between two telco companies, if I had no choice to pick within a telco company, I'd pick Globe because of its potential to grow higher, because of its exposure to data. It has Tel at this point has a higher dividend yield ratio, but Globe is still relatively attractive, plus the growth that you'll receive from it.
Both telcos, though, are under pressure to increase margins, as well as analysts everywhere have told us that there will be more increased competition next year.
Of course. So if there are sectors that they would like to deprioritize, I'm not as bullish in the telco industry compared to construction, consumption, and all of the other bright spots that have been hitting our country in the past few years.
All right, let's move on now to the peso. It's also set to end the year on a down note. We're still hovering near 8-year lows, and in fact, that's not the worst of it. Here on the left-hand side, we're seeing the forecast, which is what consensus forecast by Bloomberg analysts, not Bloomberg analysts, but analysts that surveyed by Bloomberg are putting it at. On the right-hand side, you had the forward. In other words, that's exactly what the market is pricing in at this stage. First quarter, 50.7. Okay. Not very good. Is that a concern at all?
I mentioned in a couple of guestings back that if the dollar rate would hit 48, it could possibly hit 50. So now, if the dollar also holds above 50, I think we could go up to 52 on a technical level. However, valuations-wise, Diwa Gudigundo said it well, that whatever you're seeing there is just really movement in terms of sentiment. It's just really price volatility, but it hasn't changed any of the fundamentals that are there. The dollars that we have, the GIR, it has dipped a bit, but it's still enough to cover imports for 9-10 months still.
9-10 months, that's right.
This is good still for BPOs and OFW remittances, which is still our bright spots. It may hit imports, but I haven't really seen inflation go up. So I'll be concerned if this continues to stay at a high level and you would see inflation suddenly go up in the next few months.
All right, we're going to leave it at that for now, but we're going to bring you back in later in the show. Marvin Germo, stock trader and financial analyst. Right after the break, Double Dragon says is on track to hit its 1 billion peso profit target and to complete 50 new city malls next year.